Welcome to the Rule Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we take your questions and we ask Rick himself. Rick, how are you, sir?
Life is very good, thank you, and I trust for you as well.
Yes, things are going quite well here. Any opening thoughts? Anywhere you'd like to take the discussion?
Well, I think one of the things that's interesting is the current rout in precious metals and precious metals equities markets. I have a few comments there. The first is that when people talk about the fact that it's down precipitously, they need to ask themselves about their time frame. If you take yourself up a year, back a year, pardon me, it's only up less, not down. People need to understand that. The second thing is, if you have the courage of your convictions, share price declines are a good thing, not a bad thing. For myself, I believe that the up move in the gold price, particularly the dramatic up move that's happened over the last year and a half or 2 years, has been rear-looking, meaning that I think the explosive upside in the gold price was merely taking the tension off a coiled spring. The set of circumstances, the narrative that propelled gold up in 2025, 2024, was present in 2018, 2019, but nothing happened in the market. The consequence of that is that we had a lurch up, and now we've had a retreat down. If you believe, like I believe, that the US dollar loses 75% of its purchasing power over the next 10 years, and that gold maintains its purchasing power, by definition, you're a gold bug. You want to own more. And if you believe this, you should welcome lower prices as opposed to higher prices. One needs to decide what price action is in all of our interest. For myself personally, there's been a range of precious metal stocks that I was interested in participating in. As recently as the PDAC, the Prospectors and Developers Association of Canada, which was 2 weeks ago in Toronto, I had 90 conversations over 4 days that ended up involving me writing exactly 0 checks. I would welcome lower equities prices because I believe that both precious metals and natural resources equities prices are higher over the next 5 years or 10 years. I have no idea, frankly, whether they'll be higher or lower over the next 2 weeks. As to the fact that the increase in oil price will increase the all-in sustaining costs and hence lower the earnings of major gold producers, this is true. In the near term, this is very true, and I think it's a wonderful wake-up shot across their bows. Many of them were budgeting for $60 oil into the indeterminate future. And as we've discussed, Steve, you and I on this segment many times, the deferral in sustaining capital investment in the oil and gas industry has meant that there were structural reasons in 2028 and 2009 that the oil price was going to rise. For the gold producers, this is a preview of coming attractions. I would also tell people that in the intermediate term, there was plenty of room for the AISC to rise because the earnings estimates around major gold producers were based on $3,200 or $3,300 gold. If you sell the stuff for $5,000 and your estimate is based on $3,300, there's a lot of room for upside surprises. I think what you're seeing in the market right now was the fact that the buying rally, the buying frenzy in the precious metals miners just evaporated. We used up the buyers. People use news like war as an excuse to express their emotions, and the pro emotion in gold has gone out of the trade. We're back into a negative emotion, which I personally welcome because I like to own not merely more, but lots more.
Okay. So basically, like you've taught us forever, is that when you get these declines like this, look at it as a good thing. and the thesis is still on. Central banks are still printing money, so the bet is still on, but it gives you better entry points at lower prices. Also, with oil moving up in price, that's going to put a little more pressure on some of the miners for their margins. So that could maybe bring them back down to earth a little bit.
We'll see. Yeah,
Okay.
we'll see.
Okay. Yeah, I've noticed, especially with the juniors. I took your advice a month or so ago and moved what you call to the point of no concern on a lot of the juniors. And man, you can see like Rio 2, the project down in Chile, that's gone almost in half. So that was a good timing. Canyons had a nice pullback.
I saw in the comments IS Silver, which we've talked about a lot here.
Yeah.
It was off by 40%.
Yep.
If you like IS Silver, that's a good thing, not a bad thing.
Yep. Yeah. Yeah. A lot of them. Gold. That one's also had a nice retreat. Equinox has had a really nice pullback. Adrian Day said the other day he thought it was good at $16 in a deal, and today it's 12. You know, I mean, that's a pretty nice discount there. Okay. Oil. All right. Recent news in the Middle East is that Iran's biggest gas field on the planet got hit. So it looks like a game of tit for tat. Any updates on what you're seeing there?
Well, today, with the Qatari assets being hit, and then South Pars being hit, understand that South Pars and the Qatar Shelf are one field. This now has moved into something where the impact on energy markets won't be short term. If you solve the military impasse in the Gulf tomorrow, what you have now is a situation where the largest gas field in the world is impaired, and that impairment will take a lot of time. I would hate to be a firefighter, either in Iran or in Qatar. These highly pressurized liquefied natural gas plants are not safe places in the best of times. And this won't cure itself quickly. It's important to note that this has ramifications beyond energy. As an example, I've been studying helium markets for about 6 months. About 30% of the world's helium comes from Qatar. That's going to helium heaven in the near term. And that impacts an awful lot of things. Where this ends, nobody knows. But we've entered the phase of the war where if each side begins to go after non-military targets, which is to say, as an example, if the Iranians go after Ghawar, the largest onshore oil field in the world in Saudi, and if the Saudis or the Americans and the Israelis were inclined to reciprocate, you're talking about a reduction in productive capacity that's other than short term, and this could have very long term impacts. It could be that I'm thinking about this as an excuse not to sell my oil stocks, which I don't want to do. I may be making up reasons to stay involved. I tell myself that the oil stocks that I own are indirect beneficiaries of what's happening in the Gulf, and hence don't need to be sold. Normally, as you know, Steve, if I get involved in a sector like I got involved in oil and gas, and I expect a 3 or 4 year time frame to be right, and I'm right in 6 months, I'm a much more aggressive seller. I haven't sold any of my oil stocks yet, and it may be that I'm making up reasons to psychologically justify what I want to do.
I haven't either, but I've been doing covered calls, and so
Right.
essentially collecting a premium, contractually binding myself if it gets up to a certain level that I'll sell, but what I'll end up doing is I'll just roll it out anyways. What do you think?
I haven't done much of that except in what I guess you guys call spreads, where I would sell both near dated puts and calls around a core position, figuring what was most likely to happen is that both the put and the call, because they were short term, would expire worthless, and I just grabbed the premium. But in the alternative, that I would get paid to buy low and sell high, something that I otherwise ought to be willing to do for free. It's worth commenting that normally if a stock gets called away from you, it's doing fairly well, and you are at least psychologically sad to see it leave your portfolio. It's also true that if a stock gets put to you, the stock that you already have in that position is down. So it's also psychologically troubling. And the fact is, I've been troubled a few times, but I found over the years the idea that I get paid to buy low and sell high is a good thing. I don't write, well, let me put it a different way. I don't buy puts and calls. I'm not smart enough. I learned when I was in university that about 98% of the options contracts ever written expire worthless if they're held to maturity. And the idea that I'm going to pick that 1 in 50 doesn't seem very likely to me. So I only sell puts and calls, and I only do it when the VIX is above 20. In other words, I want to get paid for volatility. But in those circumstances, if there's a position that you really like and you can sell puts and calls around a core position assumes that you know something about the value of the company that you're selling the puts and calls on. Uh, Selling volatility around a core position is probably a good activity for those who are, psychologically capable of dealing with volatility and dealing occasionally, frankly, with being wrong.
Okay, that's a good one. I never thought of looking at the VIX while I'm doing this. It's so obvious now that you say it. I'll start doing
Puts and
that.
calls, at least from my viewpoint, are all about monetizing volatility,
Yeah.
or the difference between volatility and intrinsic, and hence they're useful to me. But I'm not a trader, as you've come to realize, Steve, and so I need to discipline myself in terms of utilizing that technique to periods of time when it is more likely than not to pay me. And the consequence of that is that I use the VIX.
Okay. Okay. All righty. Um, let's see. Let's get to some questions here. Unless you got any other thoughts, Rick?
No, sir, that's plenty. Let's get to what people want to talk about.
Okay, let's do it here. Eric is saying, "Hi, Rick and Steve. I'd like to know Rick's opinion and assessment of Discovery Silver and Alkane Resources at this time. Does Rick have any information regarding Cordero's permit application?"
I have no comment on Alkane. I own Discovery. I will admit I'm delighted but surprised at the extraordinary price run up in Discovery. Uh, Tony McCooch is a very good guy who I've known for most of my adult life, and his utilization of Discovery as the vehicle for the acquisitions that he did from Newmont and the subsequent acquisition, massive sulfide deposit, whose name escapes me all of a sudden, I think are wonderful. We've been given to believe that Cordero is one of 6 deposits in Mexico that will be permitted in calendar 2026. Now, I have to admit that the president of Mexico does not have me on her speed dial. So the idea that I have good information or bad information isn't something I'd be prepared to speculate on. Very high quality deposit. And the person who is in charge of the team that is responsible for putting it back into production is a very good guy. The only thing I begin to be concerned about is that he's got a lot on his plate now. He needs to revitalize the VMS deposit that he just bought. He needs to revitalize the Canadian gold operations from Newmont, which were cash starved, and then he would need to build Cordero. That's an awful lot for one team.
Okay. David wants to know, thank you, Rick, for providing the Rule Classroom Plus and your endeavor to help people. Could you please ask Rick for his opinions and rankings on both Midnight Sun Mining and Eco Atlantic Oil and Gas?
I have no opinion on Midnight Sun. Eco Atlantic is under review as we speak.
Okay. Rodrigo says, good afternoon, Rick and Steve. Hope you're doing fine. Yes. Could Rick give any advice on back of the envelope math related to reserves? Does he see value on ounces per share as a criteria? Does he have any other valid indicator?
The quick answer is no. The market pays an awful lot of attention to in situ ounces per share. That doesn't take into account the cost to produce those ounces, the capital cost necessary to develop those ounces, or when the ounces will be produced. There was a newsletter writer who made an absolute fortune over time, calculating ounces per share and selling that as advice to people who were desperately searching for simplified valuation matrices. Simplified valuation matrices, the utility of those matrices usually vary inversely with the ease spent obtaining them. Think about this. Two different companies have 1 million ounces of gold. In one company, pardon me, it takes $200 an ounce to develop them, and they produce them for $1,000 an ounce. So you're into it for $1,200. Oh, and by the way, you're going to go into production next year. The other company takes $1,000 an ounce to develop them, and it would take $2,000 an ounce to produce them, and they're going to produce in 10 years. The idea that you could ascribe the same value to those ounces is, let's be polite and say, incorrect.
Okay, did 1,200 and 3,000?
You get what I'm saying. The in situ value per ounce does not take into account when the cash flow is received, like time value of money.
Okay,
It
okay,
doesn't take into account the capital cost. It doesn't take into account the operating cost. It's a silly metric.
okay, okay. All right, Rodrigo wants to know your opinion on CF Industries, Marathon Petroleum, and Imperial Oil. These kind of industries are so much easier to understand than mines and wells.
They are. All three of them, I would suggest, have long-term potential. Imperial, probably the greatest, in the sense that if sanity returns to Canada, particularly with regards to LNG sales, that Imperial would be a particular beneficiary. CF, as many people know, is a nutrients provider. It is not in the lowest cost quartile horizon, nor in the highest horizon with regards to return on capital employed. So I don't own them. And I'm afraid, what was the third name?
It was Imperial.
No, I did Imperial and I did CF. There's one other.
Oh, Marathon, sorry.
Marathon is more a refining and marketing business, and I don't know enough about that to comment.
Okay, he's got a follow-up. So these are some ETFs that kind of follow the wheat, corn, and cane. So following wheat, and then following corn, and then following sugar. Any thoughts on those ags?
I have not been particularly successful trading soft commodities, so I wouldn't want to burden the questioner with my answer.
Okay. All right. Well, Rajiv says, hi, Steve and Rick. What's Rick's most recent ranking of Aclara? And are you still a shareholder?
I am still a shareholder of Aclara. I have Aclara at a 5. I was going to move it up to 4 if we got a better response with regards to understanding how the downstream processing would work and or a joint venture partner. I own 2 rare earth companies. I own Meteoric and I own Aclara.
Okay. He says he hadn't noticed them in attendance in this next symposium. Is that any indication, or?
I haven't paid attention to whether or not they were exhibiting. They were certainly both invited.
Okay. All right. Okay. And Richard wants to know, during the fall of gold and silver, I've been buying and adding to Agnico Eagle, Franco-Nevada, Pan American, Sprott Inc., Wheat and Precious Metals. Do you agree or disagree?
I completely agree. I think the next 5 years will be extremely pleasant in that group of companies.
Okay. Good to hear as a shareholder. Pierre wants to know, do you have a ranking on Goliath? Could you please comment? Oh, go ahead.
I don't. Goliath is very, very interesting circumstance. I'm looking at it, and I'm also conversing with other folks who are better at geology than I about Goliath. Positive implications, let's say that.
Okay. All right. Yeah, he's asking about the general, any comments on the general deposit?
Work in progress. It's a really, really, really interesting target.
Okay. Cohen, long time. What's up, Cohen? Versamet royalties, opinion on management team and current ranking.
Versamet's done too well of late. The stock's on an absolute tear. So I've taken it from a 5 to a 6 on valuation basis. If you'd asked me the question 6 weeks ago, it would have been a 5. High quality management team. They've grown the company very well. They engaged in extremely, extremely competitive industry, and they engaged themselves, not through investment bankers. They've done a spectacular job. The market has rewarded them.
Okay. Asymmetric research. So a shout out if you guys don't follow him over on Substack. He's got a great Substack piece. Follow him over there. He says, "Hi guys, it's been a brutal across. It seems everything on the gold space, for instance, is getting hammered. Doesn't seem to matter if it's a low-cost producer, where it operates, and what sort of gold price was already being discounted in the shares. Seems like a lot of quality names are cheap enough. What are your views?"
I wouldn't disagree. I think you need to use this selectively. Um, Normally, the best of the best come out of these precipitous declines first. So if you are looking for a shorter term but muted gain, I think you'd look to the best of the best. I'm looking at this, and I'm not going to name names, I'll tell you that ahead of time. I'm looking at this because I've been compiling a list of companies that I think would be reasonable amalgamation or takeover targets. The difficulty that I was experiencing with that endeavor as recently as 5 weeks ago was that the prices that it would be logical that they would be taken over at, they'd already obtained in the market. To the extent that I can find a company that I think is a logical fit into another company, let's say a 30 or 35% discount to NAV, where I think NAV is increasing, is something that I would use to my benefit. And I would urge Asymmetric, who I think does a pretty good job of fundamental analysis, to look in terms of where his own portfolio feels deficient, and then do some valuation calculations and buy goods while they're on sale.
Okay. He's got a follow-up on natural gas. Isn't the war in Iran raising the odds that Carney will allow the building of new LNG facilities in Canada? This would be very bullish Canadian gas companies.
My hope is that the odds of LNG facilities in Canada are going up anyway. The Pacific Rim, which is the best LNG market around, and frankly the best for Canada to serve, is structurally dependent on compressed natural gas from the Gulf, but is growing very rapidly. Canada has a choice. Canada can go ahead and compete, or they can leave that market to the Northwest Shelf of Australia. I hope for Canada's sake they choose to complete. Now, understand that the current difficulties in the Gulf may or may not be longer lasting. What happened today with the attack on South Pars and the attack on Qatar means that the structural challenges to LNG supply will now be with us for 3 to 5 years.
Oh, wow. That long?
That's what
Okay.
that's what the Qataris say. I don't know enough about the damage to South Pars. I know that the Israelis hit it today. The fire was impressive enough that you could see it from Landsat photos. You could see it from space.
Wow.
So it's clearly quite a fire.
Yeah. Yeah. Do you see maybe the United States and Canada kind of creating a bubble and not allowing exports in hydrocarbons?
There has been a discussion that for political reasons, Mr. Trump might do that. That he sees, or his advisors see, rising gasoline prices as a political threat to him, and that he may choose, from a national security point of view, which is to say, from a political point of view, to restrict U.S. exports. That would further challenge the United States' standing in terms of its reliability as a trading partner, of course, but I don't suspect that any president really cares about that.
Okay. All right. Back to Diane. I would like to know the impact of Clive Johnson retiring in June. What do you think?
That's interesting. I'm a huge fan of Clive. I've known him virtually my whole adult life, going all the way back to serving whiskey to him in a bar I owned in Vancouver, which is a long time ago. Clive is a truly superior human being in the sense that he's built a couple of great companies. He attracts people who are fiercely loyal. He makes decisions. He builds things. Clive's problem is the same as mine, his age. One wonders in his 70s whether he isn't making exactly the right decision, whether this is not exactly the right time to hand off the reins. They are coming off what we hope will be a successful construction project in northern Canada, Goose, which has been way, way, way over schedule and way, way, way over budget. I talked to Clive at PDAC, and he said that he believes, like we saw with Equinox 2.5 years ago, that they will attain economic completion, that they will attain it fairly quickly. And I guess he sees now that that challenge is, at least in his mind, behind the company, that this is probably a good time to leave to a successor the challenge of continuing to build B2. If the market responds poorly to the succession plans, I would suggest on a valuation basis, if Goose works, that the market will arrange for a successor, which is to say, if the share price doesn't respond, getting both Goose and Fekola would be a temptation that another major mining company wouldn't be able to resist.
Okay. All right. Let's see. Nick wants to know, has Rick heard of Sprott Inc? Just kidding. What is his ranking and value? It's starting to look like the back end of a hockey stick there. What do you think, Sprott?
Yeah, Sprott's come too far too fast. The business is in superb shape. I am in reasonable contact with Whitney George, who is both a friend of mine and the CEO of Sprott. For those people on the thread who don't know, I believe I'm the largest shareholder of Sprott, although I'm not an officer or director of an employee. I remember when Eric Sprott bought my business that our combined AUM was somewhere just below $3 billion. I saw in the most recent quarter that Sprott's consolidated AUM now is in excess of $72 billion.
Wow.
Clearly, the management fees that one generates on $72 billion are substantially different than the management fees that one earned on $3 billion. And in fact, what we've seen in the income statement is that the fee-based income has increased much more rapidly than the fixed and variable expenses. And I think that continues. I think that Sprott has probably the best public brand name in natural resources and precious metals. And I think, well, this quarter may be a little weak in comparison to the quarter before it, but not in comparison to the same quarter a year ago, that the business has baked in the cake growth. It has come so far so fast that it wouldn't surprise me if the stock had a retrenchment or at least traded sideways for a while. But I believe and continue to believe that 3 years from now or 4 years from now or 5 years from now, when the current bull market in precious metals continues to evolve and where the bull market in raw materials and industrial materials erupts, that one of the major financial services supermarkets in the world, UBS, Manulife, somebody like that, when they consider whether they should build out a natural resources silo in their money management business, will look down and say, we like those assets. We think it's going to be cheaper and faster to buy Sprott than it would be to replicate it. In other words, I think that Sprott is likely to be taken over in a 3 to 5 year time frame.
Okay. Josh wants to know, what does Rick think about, I'm going to butcher this, Tierman Gold Corp?
Don't know the company.
Okay. Tiernan?
Don't know it.
Okay. All right. Let's see. James wants to know. Okay, this is a little long. Talking about the COMEX. According to the COMEX Metal Stocks Report, silver total inventory has declined in 2026 from 449 to 335 million ounces. That's an average rate nearly 1.5 million ounces per day. Assuming all eligible silver becomes registered, the inventory would be depleted by November. Seems to me that something has to give. Either new supplies arrive, but the Silver Institute forecasts a deficit. Demand for silver softens via thrifting, substitution, recession, or the price increases to rotation. What am I missing? Is my information or math wrong? What do you think of the COMEX not being depleted? Thoughts?
One of the reasons for the fairly rapid depletion of COMEX stocks was the fact that silver for immediate delivery in Europe was selling on any particular day at a 3.5, 4, sometimes 5% premium. What that meant was that futures contracts, which traditionally were rolled over, were held for delivery, as people would accept the physical silver and ship them to Europe to grab an overnight 4% premium. Those premiums have fallen away. So the incentive that futures traders have to take delivery and ship to London for the arbitrage has fallen away. I think you're going to see a lot less acceptance of physical delivery. So I think that's less of a problem. I think too that the scramble for good delivery silver rather than other types of silver, a scramble that saw coin dealers in the United States either refuse to take junk silver or take junk silver and non-standard rounds at a 15% discount to spot, means that you are going to see a big, big, big transition from unregistered and non-good delivery through the refining process into good delivery. And I suspect that you will see, absence of real shock, some of the imbalance at COMEX taken care of by two factors. One, the lower incentive for arbitrageurs to take silver out of COMEX because the premium with Europe has declined, and also the fact that the refineries are able to buy non-good delivery silver at a big discount to spot, refine it, and then deliver it as good delivery. The refiners, wherever they are in the world, are working 24/7 in the silver business.
Okay. What about China right now? On my weekend show, I always pull up the cost of gold and silver in troy ounces priced in US dollars that it's selling on the Shanghai Futures Exchange. And there's been a premium now with China that gap is starting to close, but that premium at some points on silver was, north of $15. That literally means that China's buying America's silver, right?
It means a couple things. It also means that they're playing political favorites. Silver can't be exported from China except through an authorized export dealer. The Chinese government, as I understand it, has authorized 42 dealers, which is a way, I would suspect, of passing out favors to your friends.
Okay.
Think Trump's son buying a rare earth company, buying into a rare earth company 90 days before it gets a Department of Energy contract. Political favoritism rife around the world.
Okay. All right. Good question, James. Jai wants to know, I noticed throughout recent interviews, Rick has been asked about oil and gas and precious metals, but not as much as critical minerals. Does that mean it is a good time to invest in critical minerals for defense energy? What do you recommend?
My criticism of critical minerals is that they're very thin markets. People like them on the upside, but if you bring in a source of supply in a very narrow mineral, and by the way, that includes rare earths, you can absolutely obliterate the market. So markets like antimony, vanadium, never mind gallium, germanium, I'm tempted to say all that crap that ends in IUM. They are interesting speculative themes. They're treacherous investment themes. So to the extent I can, I avoid very small markets. I've allowed myself to come into the rare earths market because when I did some years ago, they were not as fondly regarded as they are today. And I saw in rare earths a circumstance where, for geopolitical reasons, that it was not unlikely that the US government, as dumb as they are, would make capital available to me uh, sort of at zero cost. There's nothing in the world that incumbents like as much as dumb money, and there's no money as dumb as the government's. So I participated in that one for those reasons, greed and larceny. But I'm nervous about the current fad around critical materials.
Okay. All right, Luce. What's up, Luce? Good to see you. Hi, Rick and Steve. Thank you very much for the support, especially in the current circumstances. You are welcome. I have heard China is involved in the management of oil coming out of the Strait of Hormuz, and that some of it is being paid in yuan. What do you think?
I think it's likely that to the extent oil is coming out of the Persian Gulf, I mean, the most probable destination of that is China. The only likely seller are the Iranians. The idea that that transaction would take place in US dollars, subject to the SWIFT banking system sanction, is nil. So I would assume that if oil is getting through the Gulf, and I have heard reports, which I'm in no position to verify, I would assume that that transaction would take place in yuan.
Okay. I have been started following a guy on YouTube that tracks all the shipping.
Right.
And he said that in the last couple of days, some ships have moved up towards Iran, stopped for a minute, and then come back down. And there's reports of duffel bags being thrown off of the ships. So take that for what it's worth. They're probably collecting something. Oh, here's a good one. Martin. Hi, Rick and Steve. Centaurus will most likely take the construction decision in July and August. I'm only seeing positive developments at the moment. Do you see any specific risks with Centaurus?
I think a lot of risks were obviated the other day when they signed the offtake agreement with Trafi. That is a $450 million contingent payment. The construction finance risk is effectively gone there. You could still have a problem, but I think Centaurus is on the runway now.
Yeah. Okay. So maybe we can go into that a little bit. I just got their printout right here on my desk. So Glencore is going to be putting up basically, it looks like Centaurus is, when they get into production, they're going to be putting out like 65,000 tons a year. And Glencore has agreed to buy a third of that, 20,000 pounds a year. They're going to ship it up so all the way down from Brazil. They're going to ship it up to their Sudbury smelter, way up where Jason Jessup is with Magna Mining. Can you go into that a little bit more?
Sure. I mean, Glencore has substantial unused smelter capacity, and I guess the concentrates that would come out of Centaurus are suitable for that facility. So Glencore has, for an upfront payment and apparently some credit guarantees, arranged to take a third of the concentrate shipments from Centaurus up to Sudbury. What that does is it provides access and line of sight to as much as $450 million. When you look at that as a percentage of the total bill to put this thing in production, it suggests that, including credit enhancements, the thing's effectively financed.
Okay, that would be awesome, especially with nickel looking like we're breaking out to the upside. We'll see. Rick's thoughts on
we should talk about nickel for just a second. One of the difficulties that the nickel market has had, well, the difficulty has been lateritic nickels. And we've talked before on this segment about the fact that the laterite industry, which has decimated the nickel business, has been able to do it on a cost basis because of two things. The first has been what are really amazing environmental damages that occur as a consequence of lateritic nickel mining, particularly on Sulawesi. And I speculated as much as a year and a half ago that those environmental damages were so extraordinary that neither the Indonesian people nor ultimately the Indonesian government would allow it to continue. And that's been happening. The consequence of that is that although I wouldn't describe that industry as clean, I would describe it as cleaner. And that's reduced as much as 20 or 25% of the cost advantage that lateritic nickels enjoyed. The other side of the equation is that lateritic nickels are extremely energy intensive, using in almost every case petroleum energy. The energy bill around the transformation of lateritic nickels is as much as 30% of the fabrication cost. Well, that just doubled. And that's going to have a real impact.
What about the sulfur? The sulfuric acid they use to process it with the hang up in the Strait of Hormuz, do you think that could be detrimental to Indonesian mining?
That's going to impact a lot of people. It'll also likely over time be useful to the sulfide nickel guys. The byproduct of smelting sulfide nickel is sulfuric acid flue gas, which gets turned into sulfur and sulfuric acid for sale. One of the points that Robert Friedland has made around his new smelter in Congo, note that Robert never misses a promotional opportunity, is the fact that one of the byproducts of smelting copper in Congo is the production of sulfuric acid, which Congo is a net consumer of. And the consequence of greatly reduced, well, 100% reduced supplies of sulfur stripped from natural gas in the Persian Gulf has meant that users of sulfuric acid around the world are going to suffer, and producers of sulfur and sulfuric acid around the world, shout out to my friends in Vancouver who look at those yellow piles across the bay every day, are going to benefit.
Okay, could there be, because there's a lot of sulfur used in, like when they're mining copper oxides and like that. If the company, like the rest of the world, didn't really see this coming and they didn't stockpile sufficient sulfuric acid for that, could you see a hiccup in the copper miners where maybe we get less output in 2026 than we normally would expect?
Yes, I do. I mean, most copper that's produced is conventional copper from copper sulfides, not copper oxides. But I think for the copper oxide producers, particularly the small guys in Chile, who might not have had the balance sheets to lock in sufficient supplies of sulfuric acid. Sulfuric acid, if this continues, may for a time be unavailable. Pick a price. Um, Understand, and probably most people on the call don't know this. There is some sulfur mined as a primary mineral, as an example, in the U.S. Gulf of Mexico through fresh sulfur extraction. But most of the sulfur and hence most of the sulfuric acid that we use in the world comes as a consequence of smelting base metals ores, which is to say dissolving the sulfide bonds, vaporizing the sulfur, condensing it, and then selling it as sulfuric acid, or is stripped out of sulfur-rich natural gas. And the biggest source of that sulfur-rich natural gas has been the Persian Gulf. That's gone. The biggest remaining source of sulfuric acid in the world is high sulfur gases in the Western Canadian Sedimentary Basin in Alberta, which is traditionally shipped out of the Port of Vancouver, which is why sulfur prices worldwide are quoted FOB Vancouver.
Okay. Piggybacking on that, if we have a decrease in sulfuric acid supply because of what's happened, would that, and a decrease in production of copper because of that, would we see, or would you expect to see an increase in the spot price of above ground copper?
No, I think that would be more than offset by the deleterious impacts that war will have on the global economy.
Oh, okay. All right.
I mean, part of what you say is true. I don't think that it'll offset the negative impacts that war will have on economic confidence. I think a look at the S&P 500 or the Dow the last few days will tell us what the market is saying about the near-term direction of the economy.
Okay. Yeah. Had a little bet there on the Sprott Physical Copper Trust. It's already trading at a discount, but that's a good point. I didn't factor in the fact that copper usually doesn't do well, and when when a war's going on and we have a recession coming. Okay, Rick, or no, sorry, Zephyris wants to know your thoughts on Lindian. Have you heard of Lindian?
No, sir.
Okay. Josh wants to know if you have any investments in the Ring of Fire, and if so, which ones do you like?
I don't. That doesn't mean I won't. I was attracted to the Rim of Fire 20 years ago. It would appear that for those of you who are on the call who don't know enough about Canadian geography, the Ring of Fire is a part of Northern Ontario, which is rich, particularly in mafic and ultramafic deposits, particularly as an example, chromium, but it's also prospective for copper, nickel, platinum group metals, a very remote part of Ontario and hitherto unavailable, and also a place where there's some severe sociological challenges. The Indigenous hosts, the First Nations, have at best a fractious relationship with the Canadian government and the Ontario government. And for a very long time, there's been a difficulty fashioning an accord to get a road in there. Apparently now, that has been approved, which is to say there is consensus among the First Nations group in the Ring of Fire and the government of Canada and the province of Ontario to bring roads and other essential services into the Ring of Fire, which should accelerate mineral development. Having given you that wonderful overview, I don't have any names to play it.
Okay. David wants to know thoughts on GoVX.
GoVX is proceeding relatively well in Zambia. I don't own it. I still think Niger is unfinished business. I don't know how to discount the political outcome in Niger, so I don't own GoVX because I don't know how to value that asset. I certainly liked the asset, and I like General Atomics' asset. I just don't know who's going to end up owning them.
Okay. Global Atomic, right?
Global Atomic. I'm sorry.
Global Atomic. Okay. All right. We're getting close. We got about another 10 minutes or so. So if you're watching on YouTube, Twitter, any other outlet, we're pulling the questions from the Rule Classroom Plus. So follow the links down below. Come on over. It's ruleclassroom.com. All right. Boniface wants to know, could Rick comment on the sudden popularity of thermal and met coal and how you see each sector playing out in the current events?
To hear the gentleman describe them as popular, certainly successful. And I guess the share prices in the thermal and met coal sector have been strong, but not as strong as the cash flows would warrant. I've been hearing about the demise of coal for most of my adult life. That my favorite energy physicist, what's her name? Greta Thunberg, had suggested that coal would go the way of the dodo. Back around the time when she's alleged to have become an adult. The largest year in coal demand in human history was 2025, and it's set to eclipse that in 2026. So I suspect that coal will continue to do well. There is not a lot of direct competition between oil and gas and coal in terms of the generation of electricity because coal, other than as a peaking source, is so much more efficient than oil and gas. So there's not a lot of direct competition. But I suspect that the disruptions that we've seen in the Persian Gulf will reinforce decisions to build additional coal-fired capacity in places like India and the Philippines and China, which rely on many, many, many sources of fuel. So I suspect that what's going on in the Gulf is marginally bullish for the coal business. But the coal business, despite what its detractors say, doesn't need much help. The coal miners are making a lot of money, and far from disappearing from the energy scene, coal plants are being built like mad. I noticed with some amusement comments on X the other day about the fact that the largest installers of solar capacity, wind capacity in the world were the Chinese. And then somebody posted a graph right underneath that about new coal plant construction in China. It's pretty clear that the Chinese are adding all sources of energy as fast as they're able.
Okay. On wholesale demand destruction chances. Could Rick also give his comment on his views with regards to wholesale demand destruction and the chances of a Hormuz-induced global recession?
I think that depends on how long the circumstance goes. There's still an awful lot of global liquidity. When you look at the cash on the sidelines in short-term instruments around the world, uh, there doesn't need to be at least an equities market contraction. I don't think that there's any doubt that the longer this dispute goes on in the Middle East, the more damage it does to the real economy and the more damage it does to confidence. Understand that although it's not a tax, increased oil prices act as a tax because that money comes out of pockets, goes into other pockets, and doesn't reemerge from the receiver's pockets for a long time, which means at least in the near term, it goes to liquidity heaven. And that's particularly pronounced in consumer economies like the United States. So, will there be an economic slowdown associated with the Straits of Hormuz? Yes. How big will it be? That's really a function of how long this dispute lasts. We are in a period right now where there are reasonably adequate supplies of oil at sea in tankers and in storage. The Saudis are able to move, by some accounts, as much as 4 million barrels a day through the Trans Saudi pipeline to Yanbu on the Red Sea. So we can take the circumstance that's occurring for another 2 or 3 weeks. Uh, Beyond 2 or 3 weeks, it's going to get interesting. You are going to start to see oil really truly rationed by price. The difference that you're seeing now between the futures market in oil and the spot market in oil tells you that one or the other is wrong. The price of paper oil, fake molecules, uh, is really pretty stable. And the price for spot cargoes for refiners that need them is as much as 40% higher. That's going to reconcile one way or another. I'm not smart enough to tell you which way it's going to reconcile, but it's going to reconcile. And that really is a function of the duration of the dispute.
Okay. All right. Ron wants to know, does Rick have any thoughts on white gold or next gold?
No, and no.
Okay. Bill wants to know, hi, Steve and Rick. Rick, you have referenced positively Wheaton Precious Metals' recent streaming deal with BHP, as well as the opportunities ahead for royalty and streaming companies to finance some of the larger copper projects. Is it too much to say that you see Wheaton Precious Metals and Franco-Nevada's as one of the better ways to play the copper thesis, or would you still consider their value to be predominantly precious metals based?
What I think, I'm going to answer the question only elliptically because I don't have a yes or no answer. Uh, I think probably that I would express my preference for copper in a copper producer, but I also think that the need for finance for the copper industry and the fact that byproduct cash flow streams, gold and silver cash flow streams from copper mines are worth more in a streaming company vehicle than they are in a copper miner means that huge transactions will continue to take place in the streaming space. The most frequently voiced concern that I've heard about Franco and Wheaton is that the big transactions that built them are a thing of the past. And I believe that the big transactions are ahead of them, not behind them. So the impediment to own them, which is to say that their growth will plateau, I think is exactly wrong. You saw 3 recent announcements out of BHP, all of which are germane. The first was that they have to spend they're going to spend $4.5 billion in Argentina with Lundin. The second, a $4.2 billion stream with Wheaton. The third, a $4.5 billion announcement of a new concentrator in Chile. This is before they begin the process of building a bunch of big new mines. Uh, we talked last week in this discussion about the fact that at Metals Week in London, end of last year, the copper industry disclosed that they have to invest 250 billion constant 2025, which is, let's say, unescalated dollars, to maintain current levels of production. They don't have $250 billion. And where they're going to get a lot of it is by selling byproduct gold and silver streams to people like Wheaton and Franco. And by the way, the benefit will trickle down to the Triple Flags and the Osiskos and the Royals, because these deals are going to be so massive that they're going to have to be syndicated. I mean, BlackRock is going to get some. There's going to be something for everybody here. I suspect there's 40 or 50 billion dollars worth of streaming transactions to take place.
Okay. David wants to know, he's noticed some signs of life in Chicana copper. Do you think it can come back to life?
If you give me the use of the word could, I can sell you anything. The reason to own Chicana was that they had an exploration project that had, as I saw it, 3 different ways to be right. So far, they've disproven 2 of those. I mean, personally, I have so much Chicana that I'm unable to sell it. So there's no particular point in my trying to sell it. If I had been a little less aggressive on the way in, I would probably have sold it. If I had, by the way, to make the same decision again, without retroactive knowledge, I'd make the same decision. Chicana was a really high quality exploration target with really high quality people. If any one of 3 of their ideas would have worked, it would have been a 10 bagger. Thus far, I'm 0 for 2.
Okay. All right. We're tapping on the hour here. Let's do one more from Zahara. How do higher oil and gas prices impact the exploration plans of the juniors in 2026? How will they manage their budgets, especially in Alaska and the Yukon?
Okay, so he's talking about higher oil impact on mining companies. I suspect that the impact of higher oil prices will be negligible. The only caveat to that would be if the circumstances around the Straits of Hormuz continued to the point where the current route that you're seeing in equity prices generally continues, which is to say, if capital became unavailable to the juniors, then of course there would be a hiatus. I haven't noticed in the last week any particular softness in the ask around financings for juniors. I've probably had, I don't know, 7 or 8 deals pitched to me, and I haven't noticed thus far any softness in terms.
Okay. All righty. Well, we're tapping on the hour here. Coming up in the pipeline next week on the 25th, we've got a live stream with our resident geologist, Joe Mazumdar, in the Rural Classroom Plus. And then April 8th, we will be on with Adrian Day. We also have a Q&A, you and I, coming up, but that's not until next month. So any closing thoughts here, Rick?
Well, I would urge people to take advantage of the opportunity here, both Joe Mazumdar, who I've known for many years, and Adrian Day, who I've known almost forever. These are 2 veteran hands. They have a lot to say, and they're willing to say it to you in the Rural Classroom for free, which is a hell of a price. So I would urge you to pay attention to that. I would also urge you to remember Real Rick Rule at Substack, our new free newsletter. Free being a very good price. We've got a lot of love around that. I would urge you to consider attending the upcoming Copper Boot Camp. Copper is, I think, over the 5 to 10 year time frame, an absolute no-brainer. I mean, an absolute no-brainer. There is no way in the world, short a major depression, that we're going to have adequate supplies to meet the demand. We haven't been investing in copper for 30 years. There are some things you need to know in order to either invest and speculate in copper. And we're going to do our best in 8 hours to equip you to understand how the copper market works and how to make the copper market work for you. Finally, the last of my commercials, I promise. This year's Natural Resource Investment Symposium in Boca Raton, Florida, will be the best we've ever done. And if you were there last year, you think that's an extravagant boast because we made you a lot of money. If you came the year before, we made you a lot of money too. Because we made you so much money the last 2 years, the physical part of this conference is about to sell out. For the first time in 20 years, we likely have 30 physical seats left in Boca Raton. So if you have an interest in coming, and by the way, you should, go to Rule Symposiums and secure your seat. The live stream seats, which is to say the online parts of the symposium, which are excellent, by the way, we have no similar constraints with regards to access. We can handle virtually unlimited numbers of people online. I will tell you, if you are able to attend in person, if you are able to attend the informal parts of the conference, those parts which occur, around the coffee container if you're Albert Liu, or around the bar if you're Steve Barton and Rick Rule, are really valuable. And you don't get those often mercifully in the tapes. So to the extent that you can participate live, that's the better option. Otherwise, we had 1,400 attendees from 33 countries last year, pardon me, attend live stream. And people loved it. For those of you who aren't familiar with the product, this comes with an absolute money-back guarantee. Whether you attend live or live stream, know that you'll have access to the tapes. Know, too, that if for any reason you don't think that we delivered the value that you had expected, inform us of that via email and we'll give you your money back. There's no other investment conference in the world that has enough confidence in its content that it can say to you, no questions asked, money back guarantee. We can, we do, we will.
It's an amazing symposium. I've done both the live stream and live, and I've got nothing but good things to say about it. Rick, thank you very much for your time. Thank you for the classroom. Thank you for everything. It's been a pleasure. You have a wonderful rest of your day, sir.
Thank you, sir. Thank you, ladies and gentlemen.